In the energy quadrant, taking a look at the August WTI crude futures contract, crude fell short of an outside range day, but still produced the highest closing price since April 30th. Yesterday's high was 81.79 and today's high was 81.72, which was up about 1.23% from yesterday's close. Yesterday's high was an exact 50% retracement from the high on April 5th, that particular close, to the low close on June 4th that I just mentioned, a total move lower of about 15.7%. Crude oil is now up 9 of the last 13 sessions, and since that low close on June 4th, it's risen 11.4%. The low today, 80.23, was down 0.62%, and that was lower than yesterday's low, but we failed to get that higher high today. Still closing up near the highs, up about 1.1%. It's a pretty bullish day if you look at it versus recent price action. Now, the dollar has been a thing with crude oil and commodities in general. The inverse correlation between the dollar and crude oil has been strengthening of late. Over the last 30 days, the correlation has been running about negative 57, whereas the previous 60 days it had been closer to negative 40. Long term, the inverse correlation is about negative 60, give or take, which certainly isn't infallible, so it's not a trading strategy, but we are moving closer to the longer term average of that inverse correlation, and the dollar was lower today in the aggregate by about 0.25%, helping to give crude a little bit of a tailwind today. When all else is equal, that correlation sometimes helps in the direction or choosing the direction of crude oil for market observers, but certainly not a trading strategy, and we are noticing it strengthening as of late. We're also looking at U.S. demand for diesel, and that demand has been underwhelming, but that could change. According to reports, U.S. diesel demand in May dropped to a 26-year low as manufacturing output has been stagnant over the past 6 years or so, but that's starting to turn around with U.S. manufacturing PMIs moving back toward expansion territory. Also, a Fed rate cut could boost manufacturing if it were to happen, and those probabilities are increasing as well. So keep an eye on that in the context of looking at crude oil.